Hello folks, this is Raj Sastry from Raj Option Trading. Today I want to talk about my favorite option trading strategies for the week of February 22nd, which is next week. With that, we'll be using John Carter's, TTM squeeze methodology for this. That seems to give a very good indication for upcoming, stock option purchase. So with that, these are my favorite place for upcoming week. As you can see, Amazon, 3M, ELF, Fast, Lulu, and so on and so forth. We'll look at some of these. The reason I chose this is really, if you look at Amazon, stock price is 3249, and there is a daily squeeze, 2-day squeeze, there is a weekly squeeze, and it's really tending to fire toward the long side. Next is 3M, $176 stock price, and there is a 2-day squeeze, there is a weekly squeeze, and there is a monthly squeeze. And so on and so forth. We'll go into a little more details in the upcoming illustration. So with that, let's look at some of these symbols, stocks, and see what's the best strategy for them. For that, I will go to Thinkorswim platform from TD Ameritrade. And first, we're looking at Amazon.com. So let's look at a squeeze chart here. If you look at Amazon.com, stock is doing pretty well. This is a 1-day, 1-year chart, and then I got a 3-year, 2-day chart, 5-year weekly chart, and a 20-year monthly chart. One thing you can look at by just glancing through this slide is this Amazon stock is really upward move regardless of what time frame you're looking at, which is a good sign. And in the near term, 1-day, 1Y, it's a little bit in the trading range, but still higher highs, as you can see here, which is a good sign. So with that, let's look at the daily squeeze. This here represents the daily squeeze. So in the daily squeeze, we do see a squeeze, which is a red dot here. And if you look at the long-term wave, it's really on the positive side above zero, which is a good sign. And the little bit shorter term wave also, it's as you can see here, you have to really squint. It's a yellow bar. It's really getting shorter, telling us, hey, what, there's a possibility to fire on the higher side or a positive side. And if you look at the DMI, which is a very good indicator, the blue line is above the red line, which is a good sign. And the ADX is really showing some strength. It might, you have to really squint. There is a chance it will, be on the right side or the higher side. And if you look at the a 2-day chart here, again we got a squeeze here, a red dot here, and longer term wave is on the positive side, and ADX is the blue line is above the red line, which is a good sign. And there is some temporary weakness in the shorter term here, shorter term wave, but we can ignore that for most part because longer term wave is on the positive side of the house above zero. And if you look at the weekly chart, same story here. We got squeeze forming, a lot of squeeze, red dots. And if you look at the shorter term wave, the yellow bars are getting shorter, and there is a chance it will go above zero, which is a good sign. And the longer term wave is above zero. And clearly, the blue line in the ADX is above the red line, which is a good sign. And there is nothing great going on in the monthly chart. There is no squeeze. There was a squeeze fired, stock went up, but there is no squeeze right now, which is okay. So with that, let's look at a little bit, the little bigger chart to see what's going on from an indicator perspective. This is a little bigger chart of Amazon.com. It's a 1-year chart, 1-day, 1-year, and if you can see, there's a earning coming up in next 30 days, 4, 5. And the stock is really doing pretty nicely, not doing much for past maybe month or so. But if you look at the earning history of Amazon, there is earning here, stock kind of went up. There was earning here, stock went up. Earning here, stock kind of stayed sideways, a little bit on the bullish side. Now there is one more earning coming up. I would expect, if the history has to continue, we will see a little bit acceleration, given stock has come down a little bit, did not run into, did not go up into the earnings, which is a good sign. And if you look at the RSI is really at the mid-range, 50 type range, which tells me it's not overbought, not oversold. There is a high chance it will go up. And if you look at implied volatility is really at 40. It's at a low range right now. It's about 24. If you look at IV rank, it's 30. Which is a low, comparatively lower rank. It's a good for buyers. If you are an option buyer, IV 30 is not a bad IV. Then if you look at the DMI, we also already talked about DMI. The blue line is above the red line, which is a good sign. And from a volume average perspective, on the balance volume keeps going up, which is a good sign. And chocolate money flow, which is the blue line here, it's right now it's a little bit down. It's understandable. Whenever stock comes down, typically these indicators will point this way. But I'm sure as earnings nears and as stocks making some good move, this will turn around pretty quickly. And if you look at the pattern here, here if you look at this here, stock kind of stayed sideline, but at the time, as you can see here, money flow was good, and even here the chocolate money flow itself was kind of going up. So we can't completely rely on this. That's why we have to look at multiple indicators. But there is a very high likelihood Amazon stock will do well. So strategy for the Amazon stock is to either mainly buy a call spread. With that, let's go into a quick chart option chain and see if we can buy a call spread. So for that, let me go into chart here. All right. I'm trying to go into the Amazon, the option chain. Let's quickly go here. Okay, so let's go to Amazon here. So I got Amazon stock up here, and there are multiple option chains as you can see here. For this stock, I would really go maybe 145 or 180 days. For this illustration, I think 145 is good enough. Amazon is really consistent. So let's pick this one. Stock is at 3249 right now. I would go 3240. Let's go around 3240 right here. So I would buy a 3240, 3260, a $20 spread here. So with that, let's go here, buy a vertical spread, $20 wide. There you go. So I'm paying, for this spread around $9.63, as you can see here. And if I go confirm and send this one, as you can see here, so I'm paying $9.63, which is total $963. I'm making more than double. As you can see here, I can make a profit of 1,037. I'm, really making, I'm, paying this much money. I'm making, 1,937. So it is really, by you're making more money. You're paying 963, and your profit itself, the profit itself is 1,037, which is a good deal. So with that, let's I think this is a good one to go. And break even price is 3249. So which is right around the price the Amazon is right now. So we are basically betting in 145 days stock will be above 3249, in which case we'll make money. So with that, let's go into next idea. Next stock is really 3M. Everybody knows 3M, which is MMM. And let's go to a chart here for 3M. And If you look at 3M here on a squeeze chart perspective, I got 1 year, 1 day, I got a 3 year, 2 day chart, 5 year weekly chart, and a 20-year monthly chart, as you can see here. And here, there is a squeeze somewhere here in the 2 day chart. You have to really squint to see this. It try to fire on the higher side, but not quite. And also the longer term wave is on the positive side, which is a good sign. And the blue line in the DMI is above the red line, which is a good sign. ADX is showing acceleration a little bit on the higher side, which is again a good sign. And we also got a squeeze on the 5 year weekly chart, as you can see here. Wave is really, the yellow line is trying to be above the zero line, which is a good sign. And longer term wave is really, it's a little bit, if you have to really squint, it's above the zero line. And clearly ADX, the blue line, is above red line, and there's acceleration in the ADX itself, which is a good sign. And last but not least, the monthly squeeze has formed. So there is a longer term monthly squeeze, which tells me, this 3M stock is going to go up, for some time to come, which is a good sign. Longer term, it's bullish signal. And as you can see here, yellow bar is getting shorter. We got a squeeze actually there's a firing on the longer side, which is a good sign. The shorter term and the longer term, both waves are on the positive side. So with that, let's look at a little bit, a bigger chart here for 3M, and take it from there. So if you look at the bigger chart here, so 3M is a 1 year chart, doing really, pretty steady Eddie type stock here. They got some, last year they were not doing well. Now they're really doing well. Implied volatility is very low, 4.5 IV rank, which is a good time for option buyers to buy the option itself. And as you can see, our earnings is coming up in April 5th, which is a couple of days out, 30 days out. And the RSI itself is around mid 52 or so, which is okay. It's not overbought, not oversold. Actual implied volatility is lower than historical volatility, which tells us, hey, it's good to buy options at this time. And the ADX, the blue line, just got above red line, which tells me it's trending to the positive side. Clearly on the balance, volume is picking up, which means more people are buying this stock. And chocolate money flow, which is the blue line here, is really above average, which is a good sign. With that, I think it's a good stock. Let's see what we can do from an option trading perspective. I'll bring up MMM here. Okay, we already have MMM. So I would say it's a good tool. Go 145 days out, because as an option buyer, we have to give time for ourselves to be right. And because we are on the long side, we want some time. So with that, let's look at stock is at 176. I would buy 170, 190. So if I go to 170 here, it's a delta 59. Let's go buy it. 170, 190. There you go. So for this spread, we are paying $8.58, as you can see here. I would go confirm. So as I confirm here, I'm paying $858. My profit is going to be 1,142. So I'm, making, more money here, which is a good sign. I would go and send this, because it's a we are basically betting 3M stock is going to recover, and it's going to be above the break-even price 178, which is $2 from where it's right now, in 145 days. Because we have looked at the chart, there are a lot of bullish signs. I feel comfortable. You're not losing too much money. You're not trading the stock outright. You're just taking a bet, with a small spread, $20 spread, and you would pay 858 to make 1,142 profit. So with that, let's look at the next idea. So the next idea is really ELF. It's in the beauty space, as many of you may be knowing. It's a good, brand which is really, doing very well. So with that, let's look at ELF in a, chart. All right. So ELF is really, it's a good stock. As you can see here, it's on a positive trajectory in a 1 year chart, in a 3 year chart, in a 5 year chart, as well as 20-year chart. Mainly because, a lot of these millennials and working from home generation, they want to buy some of these ELF and they want to look good in the Zoom and, these collaboration type meetings. So with that, let's look at this here. There's a squeeze, which is a red dot formed in a 2-day chart. And as you can see, a long-term wave is above zero, short-term wave is trying to go above zero, and the blue line is above the red line, which is a good sign, and ADX itself is the white line is trending up. And in the weekly chart, there is a squeeze formed. The longer term wave is above zero, shorter term wave is trying to get above zero. And same story here, the blue line, the ADX is above red line, and ADX itself, which is a solid white line, is going up. And there is no squeeze on the on the longer term monthly chart, but clearly it's trying to go above. The longer term wave is trying to go above zero, and shorter term wave is above zero. With that, we feel confident from a bias perspective. It's a bullish bias. And now let's look at a shorter term chart here. So if you look at ELF 1-day chart, if you look at the earnings history here, there's earnings here, stock went up, earnings here, stock went up, earnings here, stock went up, earnings here, stock went up. So what I would really think is really history will repeat, given this is a good trend. And if you look at the RSI, it's telling us a stock is gaining strength here. It's about 59, which is really above zero. And if you look at implied volatility, it's trying to pick up, IV rank, implied volatility rank is 27.1, which is still low. So I would not be selling options, I would be buying options because of the low volatility. And if you look at the DMI, the blue line itself is it just crossed above the red line, which is a good sign, bullish crossover. And ADX itself, which is the white line, is trying to go up. And volume average on the balance volume is picking up, which is a good sign. And the chocolate money flow itself, which is the blue line here, is above average, which is a good sign. So with that, I feel confident about ELF with our positive bias. And let's look at the option chain here and see if we can make some call here on the ELF. So ELF, as you can see here, they got multiple option chains. I would pick up, more than 90 days. 180 is good enough. And what I would do is really, because it's a lower dollar stock, just $24.75, I would really buy a, single call option instead of doing spread. For that, I would go 20 here. Right now, stock is at 24. I would look at 20 strike price. That's the delta 77. And I would buy this one here. So $6.70. I would go confirm. So if you confirm, if you can see here, you're paying $670. Your profit potential is infinite. These stocks can go up. As it goes up, you'll make money. And break-even price is $26.70. So what we're doing is here we're betting stock will go about 2670 by in 180 days by 20th August 21. That's a good bet that I'm willing to take given there are trends in this market. So with that, let's look at one more idea which is in the fintech area. It's Jack Henry and Associates, JKHY. So with that, JKHY. Okay. So with that, let's look at the chart here for JKHY. If you look at the squeeze chart here for JKHY, they had a little bit tough time in the daily chart, as you can see here. Um, and now they're trying to recover. And if you look at the daily chart itself, we have a squeeze that's formed, and we got these yellow bars which are getting shorter. And longer term, shorter term wave itself, it's trying to go above zero, and longer term wave is really trying to get shorter here, and I think it's in a positive trend to go up. We are catching this a little bit early in the game. In you know theoretically or in the real practical sense, we want this wave to be above zero, but here we are seeing a trend here. There's a chance that this wave is going to go up, mainly because we see the red line in the DMI trying to go down and the blue line in the DMI trying to go up. So we're catching this a little bit early. And if you look at the a 2-day chart here, 3-year chart, again we got a squeeze here, and we got a yellow line here, which tells us it's trying to be on the positive side. From red it's turning to yellow. And same story here. The yellow bars are getting shorter, and we are trying to get a here also we have ADX here. On the little bit 2-day chart, as you can see here, we still have the red line above green line, but trending down a little bit, which is a good sign. Um, and then if you look at a weekly chart here, we got squeeze formed, yellow bars are getting shorter, and here also on the little bit longer term chart, we got this wave itself is above zero, and here also we got the yellow lines in the a little bit shorter term wave. Um, and monthly chart, we got a squeeze here on the monthly chart also. It's a positive indicator. And if you look at longer term wave here, it's above zero. So really, with this multiple things, especially the monthly chart has a squeeze and long term wave is above zero, that gives us the positive confirmation that this is most potentially is going to go up. With that, let's look at one more chart, which is a little bigger chart. So if you look at this chart here, JKHY, it's a fintech type company. As you can see here, its stock is kind of sort of trading sideways to the down. And if you look at implied volatility rank, very low implied volatility, 16.7 IV rank, and they're done with the earnings. That's why they took the beatings after the earnings. And if you see here, the implied volatility itself is actual implied volatility is lower than historical volatility, which is a good sign because we are option buyers here. And DMI, the blue line is trying to go above red line, and red line is trying to go below. That's a good sign. The on the balance volume is trying to pick up. It came down a little bit given the earnings and the way stock reacted to the earnings. And chocolate money flow is telling us, hey, money is flowing into the stock. As you can see, it's trying to go up here. And if you look at the historical pattern of this Jack Henry and Associates, there's earnings, stock went up, earnings, stock went down, and one more earning, stock is sideways. Now that it's taken enough beating, by looking at the longer term wave, which is a monthly chart, and by looking at the chocolate money flow, we feel this stock will go up. With that, given the stock is a little bit at a higher price, I would not recommend buying the option outright. I would buy a spread here. So with that, let's look at option chain here, and JKHY. I would at least go 18 June, which is 117 days out, and I would go to option chain here. And for this one, I would go 145. Let's delete this. So 145 and 160, a $15 spread would do the trick. So let's go buy 145, 160. There you go. So we are paying $6.75 here, and we are buying a 61 delta, which is 145. With that, let's confirm and send here. So we are paying $675. That's our cost basis, and we are making $825. That's a good proposition here. And with that, break-even price is 151.75. We want the stock to be above 151.75 by next 117 days. I think it looks like a good proposition to have. And we are not buying the stock outright, and we are not buying the call option outright. Instead, we are doing a spread to keep our cost basis low and still participate in the upward move of Jack Henry and Associates. With that, let's look at one more, which is ACAD. This is into a healthcare type stock. It's a pharmaceutical company, and for that, let's go into the chart here. All right. So, you know, Acadia Pharmaceuticals, as you can see here on a daily chart, we got a squeeze formed. And in the longer term wave, it's above zero. There's a yellow line. It came down from a below zero to above zero, which is a good sign. And in the longer term wave, it's above zero, which is again a good sign. And as you can see here, you have to really squint. The blue line is trying to go up and the red line is trying to go down, which tells us there is a bullishness here. And if you look at a 2 day chart, 3 year, we got a squeeze formed here. The yellow line bar is getting shorter, and on the longer term also yellow bar is getting shorter. It's trying to go above zero. And longer term wave, we got the bar is above zero, which is a good sign. And if you look at a monthly chart, there is no squeeze in the weekly chart. If you look at the monthly chart here, we got a squeeze formed here, and the shorter term and the longer term, both the waves are above zero, which is a good sign. With that, let's go to a little bit bigger chart here. All right, so if you look at this chart here, we got the earnings coming up in 3 days. Watch out, just 3 days out. Stock has got IV rank of 41, which is on a little bit on the higher side. And if you look at the RSI itself, RSI is at 51, which is not too bad. It's not overbought, not oversold. IV itself, as we talked about, it kind of crossed the historical implied volatility, and DMI tells us the blue line itself is trying to go above the red line. It just crossed the ADX white line, which is a good sign, and the red line is trying to go below, which is a good sign. Volume average is trying to pick up a little bit, and chocolate money flow itself, which is the blue line here, trying to go up, which is a good sign. So given earnings is coming up, and stock is trying to go up a little bit. It's already a little bit beaten down going into the earnings, trying to go up. I would probably buy a spread here. I would not buy call option outright. I would do a spread. So with that, let's go to um, the option chain here for Acadia Pharmaceuticals. Looks like a little bit slow here. Let's close one of these things to improve the performance. All right, looks like for some reason we'll come back to this if it does not work. Okay, looks like Thinkorswim is a little bit slow. With that, let's look at next idea. We'll come back to this. Next idea is really Editas, EDIT. Editas is into basically genome space. So with that, let's look at Editas chart. So if you look at the Editas chart, which is a squeeze chart here, we are catching it a little bit early. As you can see here, the squeeze chart itself, the yellow line is getting shorter and shorter. A little longer term wave is above zero, and there is this is really not a perfect squeeze type stock, because it's not a squeeze. It's trying to make a squeeze here. So the reason we are looking at this is really, this is a stock which has fallen down so much, and we see a potential for this stock to bounce back. It's really the bounce back play. Stock has dropped so much. There's very good potential in the human genome type market in the gene editing space. That's why we are betting on this. I think it's a good spec. And with that, let's go to a bigger chart here. As you can see, a stock has fallen down here, and earnings is in next 4 days. And IV itself, typically go up during the earnings, 48.3. And if you look at actual RSI, it's kind of in the mid range here. It's about 46 or so, and IV is a little bit higher than the historical IV. And DMI chart itself, the blue line is trying to go up, which is a good sign, and volume average is trying to go up, and chocolate money is also is flowing into the stock, which is all good signs. So with that, let's look at Editas, the option chain. If Thinkorswim cooperates, it looks like Thinkorswim is still thinking. So what I would do for Editas and even the Acacia, I would really buy a spread here. In case of Acacia, if I can go back there. In case of Acacia, stock is at 51.73. I would buy a 47 and 60 spread, and it's really good, a good spec, and we could participate in the upward move of Acacia. So with that, let's quickly sum up. These are my favorite option trading ideas for February 22, which is next week. Top top stickers that we looked at is Amazon, 3M, ELF, Fast, LULU, JHKY, Acadia Pharmaceuticals. With the exception of ELF, I would buy option outright, which is a Delta 20 strike option. Other stocks, because they're a little bit higher price, I would buy spreads and take it from there. With that, happy trading and have a good week. Thank you.